Hello students, welcome to your online lecture for week 8 for retail inventory. This lecture is being delivered as a summary to the key topics and learnings to be taken out of the lecture. Now, unfortunately, none of you were able to attend our online lecture for this week. The purpose of these lectures moving forward is to make sure that we can still provide you the same learnings and guidance as we would give you in a normal one-on-one or session within class. However, all done online. So it's really, really important that moving forward that you still attend these sessions online so that we can continue to give you the teaching that you need in order to progress and pass this subject. At the end of all of these live sessions, we will also be providing the summary that you will be having today to ensure that you can continue to learn. Therefore, within this online recording that I'm providing you today, you will be given the lecture slides that for you to be able to read through, and I'll pick out certain slides that you need to look at in particular in order to make sure you're capturing and learning everything you need. I'll also go through the tutorial exercises that you need to go through, and you would have been provided with a Word document for you to be able to answer those questions. At the same time, the same format in relation to homework questions. So all of these homework questions and tutorial questions, I'm asking you to answer these in your own time and also to submit them to me via email. So at the end of this recording, you'll have details to be able to email that to me so that we can check your progress. At the same time, you need to continue to remember to do the Pedesco exercise, as that is also due within the next couple of weeks. So I will start now with taking you through the slides for week 8, retail inventory, and making sure that you are across the key learning items for this. So I will be sharing my screen now so that you can actually see exactly what we're talking about here. So you would have been sent slides via your email for this week 8 topic. Within those slides, we contain last week's homework questions, which we still expect you to do. So from last week's homework, you would have had question S5-4, 5-10 and 5-11, which are your starter questions, exercise 5-5 and problem 5-8. So within the first 10 or so slides, we have provided the solutions for these questions along with the questions themselves and how they're worked on. So again, I encourage you to go through these slides, go through the solutions and making sure that you check your answers against these solutions. If you require, I'm happy to answer any questions you have on these questions so that in order to make sure that you understand how they're completed, okay? So the first question, S5-4 or starter 5-4, is journalizing purchase transactions using the perpetual inventory system. So last week we learned 2 types of inventory systems, the main one being the perpetual inventory system where we're constantly updating the closing stock figure, all right, rather than the periodic where we do an end of period journal. The perpetual inventory system is the main one used throughout this subject. So within this question, you are required to do the journal entries as per the perpetual inventory system. The next question, starter 5-10, requires you to prepare a business functional format income statement. So essentially an income statement for a retailer. Here you're given the various figures that belong into the financial statements, and then you're required to put that into the format of an income statement, okay? Next question relates to same data used in starter question 5-10. However, now you're required to prepare the balance sheet for Canberra Communications. Okay, so again, we're giving you the solution of how that puts together. And again, I encourage you to try the question first, then check in with these slides or with this recording to see how your answers marry up. The final question is exercise 5-5, which is journalizing your purchases and sales transactions using the perpetual system. Okay, so again, you're given various dates as to various transactions that's happened under the perpetual system. Okay, then you're given the solutions to those journals. Now, really important, as I said last week, pay attention to the transactions and the wording with the transactions. Have a look at the credit terms. Remember what they mean. Okay, look for the amount of days that you are eligible for a discount, what the percentage of the discount is, and then the actual due date for that payment. Making sure that you're checking the date then that they're paid, and if they do meet the discount terms, that you are applying that discount. And really important that you're applying the adjustments for GST as well. So what we're looking for is, one, are you able to pick up the transactions in the perpetual system for purchases and sales? Two, are you accounting for discounts? Three, are you accounting for other adjustments? And number four, are you accounting for GST? They are what we are essentially looking for. And when we're looking through the next lot of homework questions, you'll get the same sort of output we're looking for. Hence, again, why, as per the exam as well, these questions will be asked to test your knowledge. So to move on to the actual topic of the week, which is retail inventory, which is an extension of the recording of the retail transactions from week 7. The learning objectives that you'll go through for this particular topic is to define accounting principles related to inventory, defining inventory costing methods, accounting for perpetual inventory using the 3 most common costing methods, being first in, first out, last in, first out, and average costing method. So it's an extension of last week. We understand how the perpetual inventory system works, constantly updating that stock on hand figure, right? But now adopting those journals, adopting that process is using 3 types of methods. We compare the effects of the 3 most common inventory costing methods as per the above, okay, in terms of its profitability, how it affects the cost of goods sold and the gross profit in general. Applying the lower of cost and net realizable value rule to inventory, measuring the effects of inventory errors, and estimating the ending inventory by the gross profit and retail inventory methods. Okay, so as I said now, I'm just going to go through some of the main slides relating to this. We won't go through every slide. Again, that's for you to go through in your own time, read them in detail, read them along with the readings, and ask any questions that you may have. So what we do with the accounting principles and inventories, we look at the principles that we learned in week 1 relating to relevance, comparability, materiality, and conservatism, okay, in relation to applying these characteristics relating to inventories. More so also that you're applying those principles regarding to the actual correct inventory method you should be using and making sure you're using the most appropriate one. So remembering those principles as we're applying them. So a recap of perpetual inventory is in slide 14, okay? And as I mentioned before, and as we spoke at length about last week, it keeps a running record of all the movements in inventory rather than just doing accounts at the end of the period and doing an adjusting journal to account for that stock on hand. So you're making sure you've got a more reliable and up-to-date costing method and application as we move, which allows for a lot better and more accurate gross profit figure. Okay, so again, these are the methods that we're going to use compared to periodic, for instance, where it just looks at it maybe once a month, once every 6 months, once every 12 months, which also makes it difficult to identify errors in our stock control or identify theft or damage. Obviously, the perpetual inventory system provides a lot more ability to be able to capture those sort of things. Okay, so the inventory costing methods that you will learn in this topic is the following: specific unit costs, FIFO, LIFO, and average cost. So the ones that we'll be concentrating on mostly are your first in, first out. So that means when we're recording the purchases and we're taking out from the perpetual system, we're taking out the cost, whatever went in first, they're the first to go out. So if we had 2 lots of purchases, one at $10 and one at $12, and we're taking in the first in, first out method, and the $10 was the first purchase made, when we're doing those cost of sales, when we're taking up the sales, we'll take out the $10 first. Last in, first out is the opposite. We take in the the most recent purchase first as the one to come out. So in that example, it would be the $12 that we take out. Under the average cost, a new average cost per unit is calculated after each purchase at a different unit cost. Essentially, it uses the average of the cost per unit of what's being purchased. Okay, and then depending on the inventory costing method you use, will obviously then produce different results depending on in regards to gross profitability and cost of sales. Okay, so within these slides, you'll be given examples of how the perpetual inventory system would be used under each of the different methods. All right, so we've got a worked example for you here, and then as well as the journals that you'll make. So this will be a very common question with any exam that you're given, and as well as to help you with Pedesco. So you'll be given a bunch of transactions, okay, and you have to, under each costing method, work out what the cost of sales is going to be impacted, and of course doing the journal under each of those methods. All right, so this goes through right through to slide number 25. The 26th slide shows you the differences in using each of those methods. And as you can see, the cost of goods available, or particularly the gross profit, is greatly affected depending on the method that you use. Okay, so what you'll find is that under the LIFO method, in this particular example, you've got the lowest gross profit, the FIFO method, the highest gross profit, and average cost in between. Therefore, you've got an impact on your ending inventory as well. So with a higher gross profit, you're going to end up having a higher inventory. With a lower gross profit, you're going to have a lower inventory. However, the cost of goods available for sale will be exactly the same, because the cost of equals the cost of sales plus the ending inventory. Now, what we'll say is that the FIFO method is generally going to give you the best gross profit and therefore the highest ending inventory. The reason for that is particularly under this example, the purchases made earlier on were at a lower per unit cost amount compared to the LIFO method. Because of the lower cost earlier on, you're then taking the lower cost per unit in your cost of goods sold. Using a lower per unit cost will give you a lower cost of sales, therefore giving you a higher gross profit. However, under the FIFO method, you're also leaving higher ending inventory because you're taking the higher amount and leaving that behind as per your ending inventory, compared to LIFO, where you're moving your higher cost as a cost of sales and leaving a lower amount of ending inventory. Which method you use obviously can make a very big difference in terms of your end earnings. Therefore, you go back to those principles introduced earlier in the slides to make sure, well, what is the best method we should be using compared to those principles. Now, under any exam questions you will give, if you are given an exam question in this context, we will let you know what method we would like you to use, okay? And in the homework questions that you will have in the tutorial questions, you will also be told the method to be using, and in most cases will get you to compare as well. So, as I've just discussed, comparing the FIFO, LIFO and average cost methods are all summarised as I just discussed in slide 27. All right, and then we move on to the lower of cost and net realisable value when it comes to the maintenance of the closing stock value. So in cases where the net realisable value falls below the cost in regards to stock on hand, the standard requires the business to write down the value of its inventory to reflect the decline so that the asset is not overstated. So why would this happen? Fall in demand, physical deterioration of stock becomes obsolete, and management discounts to increase market share. So we might get discounts in order to get more business. So the comparison of the cost and net realisable value has to be made separately for each item of inventory, where practical, or otherwise to groups of similar items. So in this example, what we're trying to get across to you is that Generally speaking, you'll have a cost of, or an ending inventory based on the amount of stock purchased, less your cost of, less what your cost of sales have actually been for the period. However, what the standard requires you to do is to take your ending inventory as per your cost, compare that to your net realisable value. If your net realisable value is lower than your recorded ending inventory, then you need to do an adjustment. So that's where we're getting to under this example. Okay, so moving forward into the last part of the lecture slides, we look at the effects of inventory errors. So again, inventory errors generally are found once we do a physical stock take of our stock and compare it to the ending inventory that we've counted under the perpetual system. Again, under the periodic system, this is very, very difficult to do because we're only recording stock on hand when we're actually doing the physical count, so it can be very hard. Okay, so it's really important that we're continuing with the periodic method of counting stock or measuring stock, and then at the same time counting that inventory and comparing. Okay, this is important because we need to identify bookkeeping errors, because these bookkeeping errors create a flow-on effect in relation to other accounts, not just the stock on hand, but also the cost of sales, the gross profit, and the net profit. Okay, so, and then those errors will affect two periods, because your closing stock then becomes your opening stock the following year. Your opening stock then forms part of your cost of goods for the following year. So it's really, really important that those errors are picked up as soon as possible. Okay, an example of how an inventory error can look. If we've got incorrect closing stock on hand, what you can see is that ending inventory for the first period then becomes your beginning inventory for the second period. After the movement of net purchases, and your ending inventory again is dictated based on that, and then that ending inventory goes into the opening period for the third period. Now, the issue being is that if that amount is always incorrect, that ending and beginning inventory is going to continuously be wrong. If it's wrong, your cost of sales will be wrong and your gross profit's wrong. Hence why it's really, really important that you're picking up your inventory errors. Under another way of doing ending inventory is estimating our ending inventory. So generally, or sometimes, or often it can be, a business must estimate the value of its ending inventory. When this happens, the business may only have partial records showing its beginning inventory and records from showing their net purchases. So using the formula, you are actually able to estimate your ending inventory, which then again affects your whole formula. Obviously, the most ideal thing though is to make sure we're periodically recording our inventory, so we do not need to estimate our ending inventory. Okay, and then this shows how that works in regards to different ways of estimating your ending inventory. So the first way is from your gross profit method example. So this method requires a normal gross profit percentage, assuming a 40% gross profit ratio. So in this state, when we're estimating our gross profit, we've got our sales revenue, so we're able then to estimate our cost of sales. So in estimating ending inventory using a retail inventory method, this is when a business has a large number of items of high turnover in its inventory, and therefore is often difficult to ascertain the cost of inventories, since the cost of individual items may not be easily obtainable. The retail inventory method is therefore based on the cost of sales method. The retail inventory method requires that the business records inventory purchases both at cost from the purchaser records and at retail, the selling from the price tags. This is used to calculate the cost ratio. Okay, so two methods to be able to estimate our ending inventory. One of them is the retail inventory method, and the other one's the gross profit method. So within the tutorial questions that we'll have coming forward, there will be an example of estimating the retail inventory method. And like I said, the best thing is to go through these slides, making sure that you're going through one by one and answering those questions. So if you do need help, again, with working out those ratios and how that works, then I'm here to help you as well. So summarising the chapter that I've given to you in a review today, we are using accounting principles as the foundations that guide how we record the transaction. So do we use the FIFO method, the LIFO method, or the average cost? There are the methods that go within each are your specific unit cost method, FIFO method, first in, first out, LIFO method, last in, first out, and average cost method, which calculates a new average cost per unit after each purchase. We looked at inventory errors and how the potential to impact results across multiple periods as the closing and beginning inventory flows forward. And there are two methods used if needed to estimating inventory, being the gross profit method and the retail inventory method. So before next week's class, we need you to read chapter 6 and also not only complete the homework questions, but also complete the tutorial questions. So as part of what I've provided you here, and I have emailed it to you, we've provided you a Word document with all the questions you need to do. So the tutorial question is retail inventory. Okay, so this has 4 requirements. The first 3 requirements is to calculate the cost of sales and the gross profit using the FIFO, LIFO, and average cost method, which we've given you outline 4. And the 4th requirement is which method results in the largest gross profit and why. So once you've worked out your gross profit, you can then type your requirement out there. And then we've given you the quick check questions. Question 1 right through to question 10. So what we require you to do on those is to answer those tutorial questions, type them out, write them out and scan it in, and then I'll need you to submit that to me. Again, they're not assessed, but it's more so we can check how you're progressing, and at the same time, we can give you some feedback in relation to those as well. The other part is the homework questions. So we've got quite a few that you need to do. They are Starter 6-3, which is preparing a business's perpetual inventory record. Again, we've given you all the tables. Journalising inventory transactions using that FIFO method up there. Inventory methods, again, comparing the FIFO, LIFO, and average cost method. 6-3, measuring and journalising inventory and cost of sales in a perpetual system using the FIFO method, and then journalising those. Same again, using the average cost method. So again, we've given you the templates for both that and the journals. Applying the lower of cost and net realisable value to inventory. So as we said, we're comparing the closing stock, comparing that to what the net realisable value. So in this case, they've determined that the net realisable value of ending inventory is $17,000 and the cost is $18,000. So because net realisable value is less than the cost, you'll need to do an adjustment to bring that down. And then how does that affect your income statement? We've got a question relating to correcting an inventory error over 2 years. And again, needing to produce the new income statement. All right, and the requirement was under each year was a net profit under and overstated, and by how much. We've got problem 6-7, which is estimating ending inventory by the gross profit method and preparing the income statement. So first of all, you'll have to estimate using the gross profit method, and then, which we've given you every step to be able to do that, and then actually preparing the income statement. Then you've got continuing exercise 6-17, which is a fairly large one, is accounting for inventory using the perpetual system. So again, this is a potential preview to an exam question. So it's really, really important that you work through each of those transactions. And again, we've given you the templates to be able to do that, as well as putting it into Ledger. We've pre-filled it where we've been able to for you. Again, after doing those system, we've then got the closing adjustments that you need to do. The third requirement then is then preparing the adjusted trial balance. And then we've given you an optional question to finish off, which is problem 6-4, which is accounting for inventory using the perpetual system of FIFO, LIFO and average costs, and comparing FIFO, LIFO and average costs. So using the different systems, determining the firm's cost of sales and calculating profit for August using the FIFO, LIFO and average cost. So you would have all been emailed those questions at the beginning of the class. Again, I encourage you to look at those questions and answer them. And if you can please submit those questions to my email, which you should all have. However, if you do not have them, my email address is cborg, so cborg, @macleay.edu.au. If you can please submit that before our class next Monday, that would be much appreciated. So to finish off, you've been given a summary of today's class and everything to go through. Like I said, nobody unfortunately attended the class today, so you now all need to learn off this summary and read the slides in your own time. Like I said, I do encourage you to submit the tutorial and homework questions. Like I said, they won't be assessed, but the more of you that can submit it, the better. That way then we've got, we can understand where everything's at and we've got some more feedback. Please make sure that you continue with your Pedesco questions as well, working through those exercises. It is due in a couple of weeks. Like I said, if you can all come to the online Zoom class at 9:30 next Monday morning, you'll be sent a link early to make sure that you can do that. The whole point then, if we're able to after that initial 40-minute session, we can then spend time on any tutorial or homework questions you may have. We can also spend as much time as we need to on Pedesco to make sure that everybody remains on track. Until then, if you do need to have any questions, you can feel free to contact me. Free to contact me on my email address. First and foremost, you do have my mobile number, so please feel free to call me if you feel like you need to. Otherwise, looking forward to seeing you all next week.